The car market in Europe is collapsing, and China is gaining ground. In June alone, European car sales dropped 4.4%, but Chinese brands surged, nearly doubling their market share to 5.1%, closing in on Mercedes-Benz. BYD took off with 311% growth, selling over 70,500 cars in just 6 months. Meanwhile, legacy players like Stellantis and even Tesla lost ground. Tesla's share plunged to 1.6%. Despite EU tariffs, Chinese EVs are still undercut on price. Add Trump's 25% tariffs on European exports, and the pressure cooker is set to explode. Yet amid the turmoil, battery EVs soared, 1.19 million units registered, making up 17.4% of the market. The question now? Is Europe losing the EV war? Let's unpack what's happening. Click subscribe and watch for the next video to learn more about how this covert takeover might impact the European auto industry. Be sure not to miss it. While overall car demand across Europe is cooling down, Chinese automakers are quietly taking advantage. In June, car registrations in Europe declined by 4.4% year-over-year, totaling approximately 1.25 million vehicles. But beneath this decline, a strategic shift is taking place. Chinese car makers are quickly rising in market share, nearly matching iconic European brands. In the first half of 2025, Chinese car makers nearly doubled their share of the European market, reaching 5.1%, just below Mercedes-Benz at 5.2%. Registrations of Chinese-made vehicles surged by 91% year-over-year, with BYD, Jacko, Omoda, Leapmotor, and Xpeng leading the way. BYD alone sold over 70,500 vehicles in 6 months, a 311% increase compared to last year. Meanwhile, Europe's established automakers are struggling to keep pace. Several factors are driving this rapid transformation. First, Chinese automakers are offering competitively priced EVs with solid performance, right at a time when European consumers are shifting toward electrification. These vehicles often cost less than their European or American counterparts, appealing to price-conscious buyers in a weak economic climate. Second, EU tariffs on Chinese EVs, intended to protect local industries, haven't stopped this momentum. Even with additional duties, many Chinese EVs remain cheaper than European models. This has sparked growing tension between Brussels and Beijing, with the EU accusing China of unfair state subsidies, and China firing back with counter-investigations into European goods. Trump's 25% tariffs on European car imports to the US, implemented in April, are making it harder for European car makers to compete globally. Companies like Volvo Cars, heavily exposed to the US market, saw their Q2 operating profits plunge to 2.9 billion Swedish kroner from 8 billion Swedish kroner a year ago. According to Felipe Munoz, global analyst at Automakers, this isn't a one-time dip. Since 2019, Europe has lost over 2.5 million units in annual car sales, mostly due to high prices, lingering economic uncertainty, and the long-term impact of the pandemic. This year, Europe registered 6.84 million new cars, a 0.3% drop from the same period in 2024. This shift is having wide-reaching consequences for both legacy automakers and the European economy. Stellantis, one of Europe's largest car groups, saw its market share fall to 15.3% from 16.7% just a year ago. Their registrations declined by 8.6% in H1 and dropped 11.7% in June alone. Analysts say Stellantis is suffering due to a lack of new models and over-reliance on expensive BEVs. Tesla is also feeling the heat. Its market share shrank to 1.6%, down from 2.4% in 2024, and it was overtaken by China's SAIC-owned MG. Even with the refreshed Model Y, Tesla only recorded a 0.1% year-over-year increase in registrations for June. Meanwhile, battery electric vehicles are breaking records. For the first time, BEV registrations crossed the 1 million mark in just 6 months, rising 25% to 1.19 million units and now making up 17.4% of the European market. However, this EV boom isn't enough to offset the overall industry slowdown. Europe's car market is under pressure. Italy saw a 17% drop, Belgium fell 16%, and Germany slipped 14% in June alone. Romania's numbers were even more alarming, with a 50% plunge in sales. This is not an isolated dip, says Felipe Munoz, global analyst at Automakers. He explains that high prices, economic uncertainty, and the long tail of the pandemic are hurting consumer confidence, with Europe losing over 2.5 million units in annual sales since 2019. This year so far, 6.84 million new cars have been registered across the region, around 17,700 fewer than the same period last year, marking a small but telling 0.3% drop. You know, Trump's 25% tariffs on European car imports, which came in back in April, are starting to leave a mark on Europe's big automakers. And it's happening at a time when Chinese car makers are stepping up their game in a slowing European market. And here's Volvo Cars. They're one of the most exposed European automakers when it comes to these US tariffs, and the pain is clear in their latest numbers. Their second quarter operating profit, excluding one-off items, dropped sharply to 2.9 billion Swedish kroner, about $302 million, down from 8 billion kroner a year ago. Big automakers are feeling the heat. Stellantis' market share fell to 15.3% in the first half of the year, its lowest since the group formed in 2021. Registrations dropped 8.6% in H1 and fell 11.7% in June alone. Stellantis is suffering from a lack of new models and a heavy reliance on more expensive BEVs, Munoz explains. Tesla isn't immune either. Its market share slipped from 2.4% in the first half of 2024 to 1.6% this year, getting overtaken by SAIC-owned MG. Even with the updated Model Y, Tesla only managed a 0.1% year-on-year increase in registrations in June. Amid the challenges, there's a bright spot. Battery electric vehicles crossed the 1 million mark for the first time in the first half, reaching 1.19 million units, up 25% from last year. June's growth slowed to 15%, but BEVs now make up 17.4% of all new cars sold, led by Norway, Denmark, and the Netherlands. Ford and Volkswagen saw solid gains in BEV market share, while BYD and SAIC shifted toward other powertrains due to tariff concerns. The Renault Clio took the top spot in June with over 27,200 registrations, ahead of the Tesla Model Y. For the first half of the year, the Dacia Sandero, also part of the Renault Group, was the best-selling car overall. Some models are seeing explosive growth. The MG3 jumped 258%, the Fiat and Abarth 600 rose 400%, and the Audi A5 climbed 149%. New entrants like the Renault Symbioz and JQ7 also made strong debuts, registering 41,730 and 37,700 units respectively. Europe's auto market is still weighed down by tough economic conditions. But in the middle of all this, Chinese brands are gaining ground, and BEVs continue to grow, signaling a market in rapid transition. As Munoz puts it, the post-pandemic market reality is taking shape, and it's a very different landscape from what we knew just a few years ago. Europe's auto market is undergoing a major shift. While overall demand weakens due to economic strain and US tariffs, Chinese EV makers like BYD, Omoda, and Xpeng are rapidly gaining ground. Their affordable, value-packed models are challenging traditional giants, pushing brands like Stellantis and even Tesla to lose market share. This isn't just a trend, it's a long-term transformation. As Chinese influence grows and consumer preferences evolve, European automakers must adapt or risk falling behind in the global EV race. Can Europe fight back, or is China set to dominate the EV future? Tell us what you think in the comments. Don't forget to like, share, and subscribe, and hit the bell so you never miss our next deep dive. Thanks for watching.